Well, good evening, ladies and gentlemen, and thank you for being with me today. And it's good morning to our friends on the east coast of Australia. Good afternoon across the ditch in the land of the long white cloud. Okay, plenty of people with us today. That's wonderful. Thank you. Oh, thank you, David. Great. Okay. Let's move on. We're a few minutes behind starting time, but we had a fair large number of people coming in a little bit late, so let's just move on with it. And let's see, here all our usual. Anthony D from Chicago tells me it's a very rainy day there. Bernie, he's a new guy doing a tutorial. Bo is with us. David, of course, yes. George. Let's see. Here's Joe. Yeah, more of them. Oh, Gig Hilton's with us from North Carolina. Hello, Gig. And Gregory Palladini from California, of course. Jean-Philippe, welcome, Jean-Philippe. Jeff, of course. Jim and Joe and lots more, lots of, and Leo's with us. Haven't seen Leo the last few weeks. He's been busy doing farming work, planting a crop. Great to have you with us, Leo. Mark, of course. Mark L, I'll be talking about you today, mate. You're a stalwart. We wouldn't start without you. You know that. Michael, of course. Another Michael. Plenty of Michaels. Milton, welcome. He's a long-time Danielcode client. Lovely to have you with us. Noel, welcome. PG, Peter K, Peter Mack, who's not a day trader. Sanjay, welcome, Sanjay. Good to have you with us. Sean down in Adelaide. And many more coming in. Stephen, Todd over in California. Good to hear from you, Toddy. And of course, Vicky. We don't have many lady traders, and we love them, and we should have more of them, which is grand. In fact, in Japan, where their sort of program of choice is Forex, it's totally and utterly dominated by lady traders, which is wonderful. So I guess it's a culture thing. I don't know why we don't have more women interested in futures trading, because it is the most marvelous thing. And we're very happy when we do get them with us. Well, what a day we're going to have, and what a night we had. Well, for you people, the day; for me, the night. As T-bonds decided they were going to let loose, which is pretty fantastic, seeing as we're short and have been short for a while. And we've got a very special program today, because we have two special guests, Amy and Scott from Colorado. Scott is the original Zen master. He's been trading a long time. He knows a whole lot about trading. But him and the lovely Amy are doing their tutorial together, and they're having a real journey. And I don't tell you a whole lot about what you can expect when you do a tutorial, for the simple reason that trading Danielcode time is so fantastic that to most people, if you tell them the sort of returns you can get out of it, they simply wouldn't believe you. So there's little point. And secondly, as our good mate up in the really cold country in northern Canada, Dean Z, used to tell us, he made 100% in August. He made 80% the next month. Not on margin, mind you, mind the whole account. And we have clients who tell us they made 500–600% over a period of time trading Danielcode time signals. So it's very exciting, and I'm so glad to welcome Scott and Amy, and to say that this is an opportunity for you to be able to almost talk to a couple who are in the midst of it now. They're doing their paper trading, and basically with the tutorial you'll need 4 or maybe 5 lessons to get all the teaching and set up the charts and what have you. Each of those sessions is less than 2 hours. And then it's a question of paper trading. Now, paper trading is not the same as real money trading. I don't want you to pretend for a moment that it is. There are all sorts of nuances in the markets that you can't see just in simple paper trading. But paper trading is the best way to learn how to trade, particularly a totally new and different trading system like the Danielcode, which will be counter to anything you think you know about markets when we're talking about trading Danielcode time signals. So this is your opportunity. There's a couple of questions have come in already. Do type in the question box, folks, please. Any questions you'd like to ask Amy and Scott. And Amy, of course, is a complete novice. This is her first start of even seeing financial charts, let alone futures charts. So there are plenty of questions you should be asking, and go ahead, type them into the question box. I've got a few things to show you first, and then we'll be moving on to Scott and Amy probably in the next 12 minutes or so. So welcome to you, Scott and Amy. Let me see. You're here. I know you're here. I saw you were here. Here we are. And I guess, are we... We'll come to you in a little while. At the moment, you are unmuted. You are muted, Zen, so I'll just send you an unmuted request. Make sure you're not muted anywhere, if you would, my friend. Okay, let's move on. First of all, let's have a quick look at the things you would know by now. That Danielcode is a set of time ratios that control time and price in all markets. And we're going to be a bit crass today. We're going to talk about money. I guess I'm too subtle. I tend not to want to talk about money. But the business of trading futures and Forex is not to be right. The business of trading is making money. And what we have is this massive industry. I mean, just the talking heads alone, papers, radio, television, podcasts, you think of them, they go on and on and on. And behind those people, there's another huge number of people who are doing all sorts of research, and all of them are doing these things. And the options guys even more. They're always finding very, very obscure charts and relationships, and they're all about the same thing. They're trying to find out which way the market's going to go. Should you be long, which means you bought a contract if you're a futures trader, or bought a share if you're a stocks trader, that's being long. Or short means the opposite, you're sold. You're not flat, you're sold. You've sold a product, and if you bought a product, you're hoping the market will go up. If you're short and you've sold a product, you are hoping the market will go down. And in between is that occasional position of flat when you have no position. But markets are your friend. Most traders really think they're fighting the market, and you're not. Markets are your friend. They exist to give you health, wealth, and happiness. And those things certainly go together. But you're either trained or untrained. That's the final solution to it all. You either know this stuff, which no one else, or won't say no one else, but very, very few people know. We're a very, very small business, and the number of people who actually understand Danielcode time trading is a very small number. We're just, a pimple on the end of that massive, massive world of people who analyze, trade, sell all of these products. So you're going to find it all very different, and I'm happy for that. I just wanted to run over fairly quickly some of the drama from last night, or my last night, yours today. This is US T-bonds, which of course we trade. And this is a long-term chart that I've been showing you on and off since 2007. And we haven't talked about bonds lately, but we certainly talked about them a whole lot in their rundown from March 2020. And I know this chart's very cluttered. There's a lot of trading been going on with this chart. But on the way down, this market March 2021, April 2022, and September 2022. I showed you the next three levels well before they were had happened, and I know some of you did very, very well trading bonds. We had a final I won't call it a quote, but a final guess at what the low was going to be. And I put it on this chart at 114, correct 21 for that period that the market is in. And it stopped a bit above that. It's rallied for many months, 1, 2, 3, 4, 5, 7, about 12, 14 months. And now it's on its way back down. And you can see that big bar running down now, the current bar, is very, very close to that support on the dotted red line, which was, I estimated, at 114.21. It's higher than that now, because this is one of the famous Danielcode angular charts, where you are reading these charts not laterally across the page, but on the angle. And angles are terribly important to trading. So that's nice. And what's even nicer is we've been short for 1, 2, 3, 4, 5 days and sitting on $2,900 in our short trade. And what's really interesting, you can see 2 bars ago, or 3 bars ago, there's an outside bar. And the high of that outside bar was 1 tick more than the previous bar, which, is pretty fantastic stuff, particularly fantastic because we use a 2-bar buffer precisely to avoid that situation. I'll just bring that date up to be a little bit more precise with you. Here we are. That date was September the 19th. The high of the previous bar was 118.31. We had a buy signal at 119, 32, 33. In other words, 1 tick up from 118.31 is 118.32. That's where it went to. Our buy was at 118.33, which is in fact 119.02, isn't it? I think I've got that right. 119.01. We didn't get filled, which was nice, and we're sitting on 2,900 there, and about 10 to 12,000 there sitting in the success signals at the moment, which is also pretty cool. I just popped in a couple of these Forex charts. They're having some really good moves. This is Canadian Chief, the Swiss franc pair, and we had a flip me buy back a couple of weeks ago, and it's now sitting at $1,800 at the moment, which is nice. And as well as that, British pound US dollar is having an absolute catastrophic fall from grace. So of course, we had a TO3 sell signal right at the back, at the low of that inside bar, and it's showing $3,590 in brackets. It shouldn't be in brackets. It's just how that tool works. When it's going down, it assumes it's a loss, whereas for us, we're in futures. We make exactly the same money going down as we do going up. So there's a nice almost $3,600 trade in the British pound USD cable, they call that particularly pair. A lot of these pairs have particular nicknames that traders use, and the British pound US dollar pair is called cable. Okay, let's keep moving. So what is with the Danielcode tutorial, which is what we're talking about today, we teach you 2 things. We teach you trading price, and this is the standard method of market analysis, is basically on price, but it doesn't mean anything unless you know what the Danielcode ratios are. And the new twist is this concept that I've talked to you about often of target recognition, and this concept of target recognition, it's very hard for markets to do. We are putting on these Danielcode time ratios. We simply use exactly the same ratios as price, because time and price are the same thing on different axes. And if you don't believe that, you should learn about Danielcode. We simply take the price ratios the time ratios, I should say, and which are vertical, and we express them as horizontal, and they are our price targets. And you can see at all the important turns here. There are 3 to the upside, 2 to the downside. The market has found those ratios almost exactly. We make it pretty tough. We have some rules about it, and the rule is that target recognition is achieved when a bar high low or the close are at 0.1% of the Danielcode price targets. Not 1%, 1/10 of 1%, 0.1%. So we make it hard for markets, and they do it again and again and again. And I've been showing you that stuff for many years. So we're going to be talking about time trading, trading time signals. And if you haven't already done so, go to the Danielcode website or click the link that I've shown you up here. And it's called The Greatest Story Never Told, The Other Way. And it's an article, it's a long article. It's very heavy with charts, and it shows you how it starts way back in the 1970s, brings you right up to modern times in the S&P, and shows you how all of the major turns in the S&P have happened at the Danielcode time ratios. And it's quite extraordinary. It's extraordinary how accurate they are when you consider that almost 1/3 of bars are not on our charts at all, because they represent weekends and public holidays. So do read that. I urge you, if you're interested in trading, make an effort to at least read the first 3 pages and see if it's grabbed you after that. It's a big project that I did over a long period of time, but I was absolutely astonished at it, and I see this stuff every day, and you will be too. So we create and trade both price signals and time signals. And today's webinar is going to focus on some folks who are learning to create and use Danielcode time signals, what their experience has been, what their expectations are, and so on. And it's all about the money. The whole industry is focused quite simply on just one thing, making money. So in some ways, it's the most basic sort of endeavor you could think of, but it's also the most important. So here's the story so far. The financial industry is massive. It's huge. There are hordes of people working to this single purpose, to be long or short or flat. That's their mantra. They're trying to find out the likely direction of the market in the future. And they use all sorts of amazing and very, very complex modeling tools. And I think the truth is that they don't do very well. And I guess it's a question of what is your definition of very well. The better hedge funds make in a year what I would be embarrassed if that was all I made in a month. So that's this difference between futures and stocks. And it's a huge, huge difference, because we have the added benefit with futures markets that we get paid exactly the same if the market's going down to what we get paid if the market's going up. Have a look at the options market. Don't spend too long there. It'll give you a headache. Beta, gamma, a host of strategies, all with the same aim. Read through some of the financial reporting and commentary that goes in with these markets. I mean, just sit and listen to some of the talking heads on Bloomberg or CNBC, if you like. It'll give you a headache, and you won't understand much of it, and frankly, nor do I. But you don't need to. All you need is the one thing. You need to know how to trade Danielcode time. So if you can tell the color red from blue, and you can count to 3 forward and backwards, I can make you a super trader. It's that simple, and our folks today are going to be talking about that with you. You will only need a basic school level computer. If you don't overload your computer with photos or videos, which gobble up capacity, you'll just need a basic school level computer. You'll need to be able to pay my fee, which is $7,500. With terms available, you can let me know what terms you need. I will try and oblige you if it's remotely possible. You're going to need a starting bank for your futures, because you need to put up margin. Margin's the price you pay for trading futures contracts, and those margins are set by the exchange. They vary up and down, usually not a whole lot. Sometimes things get dramatic, they can jump about a bit, but you can. There's lots of mini and micro contracts around now. Literally, you can start trading futures with $1,000 bank. Have a look at the mini wheat contract, which is on the next chart we're coming to, and the all-important question: what is the risk in trading futures? Well, the great thing about trading futures is you can place what's called a stop-loss order. In other words, if I'm buying at price X, I want to put a stop loss at price Y. The difference between those two numbers, expressed multiplied by with a tick value, is exactly the dollar risk you're taking. Now, the Daniel code's rather special because the risk you take with the trading Daniel code is very small compared to almost every other system there is. There are some good systems that look very attractive going around, but the potential drawdown and the risk is just massive. The Daniel code, because I've designed it this way, is that you will never take a risk greater than 1 ATR, and ATR stands for average true range, and you want to run that over a period of at least 29 days, and that's your maximum risk for any contract. At any time. Let's have a look at this trading next contract. This is a workout on mini wheat I'm doing with Bianca, who's a lovely lady from Melbourne who's doing her Daniel code tutorial now, and she wants to start off trading mini contracts, which is fine. I encourage people to start off trading small. If you're doing it right, your bank will just gross up, and that will keep prompting you to move up to a bigger contract or more contracts. The upper limit is endless. Getting the technique right is everything. But here's a portion of a mini wheat chart that I went over with Bianca this week, and you can see there's about $2,000 in 35 days in that particular piece of chart, and that particular contract only has a margin of $630, which means that your average risk is about $110. In other words, about a fifth of margin is all you're going to risk, and that's one of the great appeals of the Daniel code trading method. Now, Amy and Scott are with us. Let me just see if I can get them talking to us. Can you hear? Yeah, here we are. So we've got the Zen Master Scott with us and the lovely Amy as well. Well, thank you for coming here, guys. I mean, you're the ones been doing all the work, and you're making it easy for me by being so kind as to say you'd be prepared to come on the webinar and have a talk to our folks. It's a lot of people here. I'm looking at the messages coming in now. A lot of people are very excited about this. They're saying, you know, it's absolutely great that we get this opportunity to ask questions, and the questions are coming in. So let's move along. No, that's all right. That's exactly how I intend to do it, Amy. So what I'm showing you here is Amy and Scott's paper trading of wheat, and they've done the bulk of all the teaching of the tutorial. They're now going through the stage that I then ask you to do some quite extensive paper trading. There are some people who just hate paper trading. Paper trading is when you go back over past markets. You're not using any real money, but you are looking at the bars. You're saying this could be a buy or this would be a sell. This is what I put the money on. This is what I made or lost. There are a lot of people who don't like doing that, but I have to tell you, the people who do the most paper trading make the best traders. And that's simply because what I'm trying to do is I want you to see everything that can possibly happen to you in markets when you don't have any stress on you. So you learn that becomes a learned behavior, and you'll know exactly what to do when you start seeing those same issues pop up in real time. And as you can see, Scott tells me he's done most of the work. Amy tells me she's run the spreadsheet and done most of the work. I have to tell you, Amy does the most marvelous spreadsheets. This is one of the best presentations of a market analysis I have ever seen, and I'm most grateful. So this is the start of the Amy's presentation of wheat. This is the end of it with their summaries on it, and you don't have to run scribbling to write them down. I'm going to deal with them all individually as we go. The next slide is Amy and Scott's paper trading of the Russell 2000, which is an equities contract. And the next slide is their summary of what's happened. So where we've got to is that, as I say, Amy and Scott have done a whole lot of the work. They've learned all the learned material. They've once you get to that stage, the next thing is I'll ask you to do some extensive paper trading, and I go over the trades with you. Every time you do some paper trading, we have another session. I'll look at what you've done, point out anything that perhaps you missed. We'll look at any big losses and say, did I handle that right? Was there another way? Was there something I missed? In other words, we're refining your trading technique again and again and again. And that can go on for a long time. That can go on as long as you like until you're satisfied that you've got this stuff down pat, and I'm satisfied that you have as well. So this was our first session earlier this week. I think after Amy and Scott had prepared these wonderful, wonderful spreadsheets, and going through them with them simply from September to November 2022, you can see on this chart there's about $14,000 in missed trades. So when we got the results through for these two, and you see on the summaries, they haven't expressed what they've done in terms of percentages. And you need to do that. In particular, you need to look at your trading and your returns as a percent on margin, because margin is the inescapable cost of doing business. You can't trade without margin. So that margin's invested while your trade is current, and it's held by the brokerage house. And these two markets are actually very different. Wheat is a commodity, and the Russell 2000 is an equities contract. It's the what's called the small cap. It's the 2,000 individual stocks that have been selected by Russell to go into this index. And you can see on the initial figures, the returns are quite different. In wheat, just straight off the face of the spreadsheets that Amy and Scott shared with me, they've made 756% on margin. In the Russell, on straight off the sheets they gave me, they made 331% on margin. Now, as I just showed you, there's $14,000 odd that we found between September and November of winning trades that they didn't take, and that adds another 14,000 onto that return, which lifts your return from 22,000 to 36,000. It also lifts your return on margin to 500% plus, and that's only a 3-month period. If we repeated that or did more than that for the next 9 months, which we'll certainly be looking at probably before the next webinar, that's going to be in the 600-700% returns. Two very important points. The wins to losses were 2.82. In other words, the wins were 2.8 times, or 282% of the losses. for the Russell, very similar. The wins were 2.6 or 262% of the losing trades. That's comparing the dollar values. Below that is the win percent. And the first comment that I made when I saw these sheets was, the win percent looks pretty low to me. We expect this win percent will normally be between 52 and 62%. That's where it runs traditionally, often around that 56, 57% strike rate. Now, talking to Bernie, who's with us today, is a new Danielcode tutorial client, who was interested. He's very interested in crypto, or he was, and he wanted to learn how to trade crypto, and he wanted to learn well enough that he could be a CTA or a wealth fund manager for a crypto fund. Well, the point I didn't have to make to Bernie, because he found it for himself, was that when you understand Danielcode, the margins on trading just the market that we trade, like you're looking at here, wheat, soybeans, grains, cocoa, coffee, sugar, the bonds, of course, the margins, the returns that folks are getting, as you can see here, are absolutely staggering. I don't think I've ever heard anyone else ever express the idea that you can get 500 or 600% on margin. Now, you need a bit more than margin in your account. Most brokers are going to want to see at least twice market. That's what they like to have, twice margin in your account. So if you were going to carry twice margin in your account, you would halve these rates of returns if you were comparing them to your total bank. And we know from our clients, we have plenty of clients who've made 100% in a month. Plenty of clients who've made 600% in a year, and these things are real. And I want to express that to you because, as I say, I've never really told you much about how profitable this stuff is. I've alluded to it, but without the detail, simply because it's very hard to believe. Everyone in the world will tell you they made 3,300 pips on this and 800 pips on that, but Forex guys in particular, and I guess the crypto guys will be the same. But they're all very much obsessed with this win percent. And the idea they've got is the higher win percent you've got, the more money you'll make. And that's an obvious thought, but it's simply not true. Now, I've been doing this business for 30 years. The Danielcode's been going, has been public since 2007. I promise you I've been doing this a long time, and I know an awful lot about it. And the reality is that a win percent is not synonymous with a huge winning account. I can show you a trading system that I invented 20 years ago that will give you 92% win rate, but it doesn't make any money. And the reason it doesn't make any money is it's got so many filters in it that A, it's too obvious, and B, it doesn't trade very often. To get that perfect setup doesn't happen very often. And if you're not trading, you're not making money. So let's move on. We've got Amy and Scott from Colorado with us today, and they are doing their Danielcode tutorial right now as we speak, and they're pretty well through it. Scott's done a bit of paper trading, a bit of futures trading, I should say, before. Amy's completely new to futures trading. And we're going to get some interesting comments from them. So let's just have a look at the last slide, which was the summary of the amazing results that they've been getting with their paper trading. And of course, they're not alone. Our clients have been doing this for a considerable number of years. But let's start now with Amy and Scott. Good evening, folks, and thank you very much for being with us today.
Thank you for having us.
Yeah, thanks, John. It's good to be here.
Great pleasure. We've got people lined up to ask questions here, and I guess most of them are going to go to you, Scott, but I've got some special questions for Amy being a lady and a novice. There, a lot of people are in that same position who should be interested and probably are interested in futures trading. That they're, sort of scared to make the leap into the great unknown, which if you're doing a tutorial, you're not alone. Okay, so the first question here is from Anthony DD up in Chicago. Anthony used to be a broker when I met him. He's now a private trader. And what his question is to what made you choose to trade the Danielcode program if you're and why is it suitable if your bank is limited? Over to you, Scott.
Yeah, I mean, basically trading the Danielcode program for us. I had encountered you a long time ago, John, when you first started out through Striker, I think it was, and saw that your system looks pretty good, but too busy at the time. But I always kept it in the back of my head. And when it did come up finally recently that I did want to trade, and I talked it over with Amy, um, we decided, yours was the best system to go with. Um, and then we talked with you and paid the money, and on we went. As far as choosing which uh, of the different futures contracts to trade, we, of course, we started with natural gas, which was a hell of a ride. And then from looking at natural gas, we could look at the charts and see which charts were moving smoothly and which are really choppy. And that's where we really zeroed in on wheat because of the types of moves it was making. Um, so wheat, Russell, soybeans, maybe silver. We're trying to look at uncorrelated markets and back test and then decide for sure if we're going to move forward with them or not. And also, of course, the amount of margin that we have to put up. And we have a limited account to start off with. So it's very important that we get a lot of bang for our buck. So our number one right now is definitely wheat.
Wonderful, thank you so much. And talking about that, we've got Mark L with us today, and he's the guy who really sort of started off this 12-month paper trading initiative. And it, of course, happened in natural gas. And Amy, I think you told me that you found natural gas pretty scary, and it can be scary, and that you got 100% return nonetheless. Well,
It was actually
with Mark,
150. Yeah, we considered it a real bloodbath, but when I look back in the numbers, it was 150% on margin, even though that was the worst trading that we did.
right, and I can assure you that 95% of the futures trading community would cut off their left arm to get 150%. So, but to put that in context, Mark, who started, I said to Mark after he finished his tutorial, got the paper trading stage, and I should say here, if I haven't already, paper trading is not the same as real-time trading. Plenty of things happen in real trading that you can't emulate or even be aware of with paper trading. But with paper trading, you're taking the open, high, low, and close of previous bars, and you're applying the Danielcode rules to them to tell you what you should be doing for your orders tomorrow. So bear that in mind. Having said that, it is the best way to learn how to trade once you've got the Danielcode rules to apply. And the reality is the very best traders are the people who do the most paper trading. That's pretty clear. Anyway, Mark L, incidentally, and he won't mind me telling this story, type in a comment if you like, Mark. Back in whenever he did his tutorial, as he got to this stage, I said, I'd like you to do some extensive paper trading for a full year of a market. Pick any market you like. He came back to me in a while, and then he said, well, I've done that. and I've traded natural gas for 2016, and it's returned $32,000 profit on a margin of $3,200 as it was then, the margin. So in other words, he's made 1,000% on margin, which if you're going to talk about what that would relate to your bank, it's probably you can halve that. It's still a phenomenal result. And what I didn't know is that Mark had also traded natural gas, paper traded natural gas for 2015 and 2017. And he picked 2016 because it was such a fabulous year. And I've been using that for all of our students ever since. So 2015 and 2017 in natural gas both returned about 50-60% on margin, and 2016 was just a huge standout year. So pretty nice stuff. Okay, let's move on to the next one. Here we are. Yeah, 2015. Yeah, got that. So Anthony, DD, perhaps I'll answer this, folks. Asked whether you take profits on the first day or let it run to the second day. Well, Anthony, with Danielcode Trading Time, you get your signal to buy or sell, and you do that. And it also tells you exactly where to put your stop loss, and you'll either be stopped out or you'll get the next signal to go the other way. So the whole point of Danielcode, one of the reasons it's such a fabulous trading system and the amounts of money it makes, is that you're in the market pretty much all the time. That's the idea of it. Okay, folks, next question here is from Jim to Amy. What brought you to the Danielcode, and what made you choose it in comparison with the other programs that are about? That's from Jim for you, Amy.
Well, I actually didn't have a choice. It was Scott who had found your work, as he said earlier, John. And that's probably a good thing because I really loved the background story, the profound insights that had come to you and underpinned this whole system. So I think that was actually, for me, more persuasive than if he had come with, a comparison amongst other platforms that wouldn't have made sense to me. So that's probably not what Jim was looking for, but that's the truth.
Wonderful. Okay, next question also from Jim. What are the problems that you've had to overcome so far when learning to trade Danielcode Time? Over to you.
I mean, for both of us, it was first just, I mean, we did it step by step with you, John, as we went. So we had the background of the market and then trading price and then trading time. It was very complete. So it took time for us to really understand how to apply each of the rules and then develop that as we went through the back testing and realizing where we were missing things and getting bad results. One of the standouts was the ATR stop, which we failed to use the first time we went through natural gas. And we did actually quite well, even just with Danielcode. Without that, we still did very well up to December, which wiped us out. So after you talked us through on that, and we applied the ATR, then the results improved greatly. So it's really understanding how to apply all the rules. And the other thing was tracking, we have an order in, what type of stop goes with it. Is it a ATR stop? Is it with the trend, against the trend? Tracking all that. So that spreadsheet that you have really is a result of trying to clarify and keep clear which order goes with which stop as we went through. And once we got that, it's been pretty fun and easy now, back testing for me anyway.
Yeah, I think I do remember, to refer back to Anthony's question. I remember the day that you said the same thing to us about being in the market all the time, and Scott's jaw kind of dropped. So he's probably not remembering that, but definitely there was an adjustment from his past trading style to being always in the market. That didn't really mean anything to me, and I had a whole host of other difficulties, but that wasn't with your system. It was just learning how to read a chart, understanding, opening and closing of a bar, what's an inside bar, what's an outside bar, why does it matter? That was all brand new for me.
Yeah, and of course, from what you've just said, Amy, Scott, I know Scott's been with the Daniel Code for a long time, and of course, before about 2013, 14, I wasn't even teaching trading time. I was
Hmm.
simply teaching trading price, which is as far as I'd got on my great journey of discovery with the Daniel Code. And
Right.
but learning to trade time, I mean, it's been like a bolt out of the blue. It's a lightning bolt. The results that we have been producing, and we've got a number of present at this webinar of guys who've done tutorials and gals who've done tutorials recently. Um, the results are absolutely staggering. And I mean, if you think about uh, the size of this business that we're in, this finance and market trading business, it's absolutely massive. And the amount of time and resources that are committed to uh, creating records, to keeping records, to trying to analyze those records, all in search of the one thing: do we buy or sell? Is there a trend? And how can we lock onto it? And that work is enormous, enormous. The number of people employed all around the world doing exactly that is absolutely huge. And
Right.
with the Daniel Code, of course, trading time, you don't need to even think about that stuff. The program itself tells you whether you have a buy signal or you have a sell signal, and what type of stop loss regime you should use. Uh, and that's actually not even created by us. What all we do is we give the parameters to the program, and then from then on, the markets themselves create those signals according to the parameters we've given them. And it's incredible to me that so few people have ever become aware of the Daniel Code. And I used this expression in regard to my last article, the greatest secret never told. It's a funny thing, trading in most endeavors in the world. If you've got or you've seen or you've learnt of something that's wonderful, exciting, prosperity making, magical, it's like, I want to share this with my friends.
Mm-hmm.
And you expect this stuff to go viral. But it doesn't, because the mindset of futures traders is, crikey, this is so good, don't tell anyone. And that's exactly what happens. It is the greatest secret never told. And it's ridiculous because uh, you have a look at Morningstar, you'll see that, if a hedge fund makes 22 or 25% for a year, they're the standout. That's it. They won all the awards. This is the greatest thing you've ever seen. I mean, if I made 22% in a month, I'd be starting to think that I should cut my throat. And you know what the real percentages are, because you've done it. You're doing it now. You're living in it. And
Right.
it's extraordinary to me that more people, there's an enormous pool of wealth just sitting in the Daniel Code, waiting for people to say, I want to find this and I want to have it. And it doesn't happen very often, which is amazing. Anyway, let's move on. Next question. Oh, this is from Stephen. Oh, Stephen and Colin. Yes, they've done a tutorial recently. Um, uh, they're talking about whether you're going to start trading real time. Oh, I see what they mean. Are you going to sim trade with real time data?
Yes.
And you thought about that, have you, Amy?
Yeah, we kind of agreed that we would do a 12-month period of back testing, have all your feedback to get comfortable with a given market, and then move into sim, live sim trading for I don't know, maybe a couple of months. I think we'll feel our way through it. But yes, we have actually begun that with wheat, which we're feeling confident about, but we're not ready to do the live sim for the Russell yet, or yeah, any of the others, soy, yeah, the other things we're looking at.
Yeah.
Wonderful. Okay, next question. Oh, this is a comment also from Stephen. Think and Swim allow you to do that. Apparently, that's the platform he used. Okay, so that's interesting. What else we got here? How are you feeling about this all now that you've progressed to this stage? Amy, it's obviously a lot of work, massive work, filling out these spreadsheets. And I know that Scott would be having the input to that, and you're recording it. It's a lot of work, but the more you do, the better traders you'll be. But how do you feel about this great trading adventure that you're on?
I'm feeling really good right now. I think that there was I had no way to imagine the returns that we're looking at right now. And I think I probably would have laughed or said, that sounds fantastical. And so it feels really fun to be looking at the numbers that we're looking at. And we've gotten it down to the amount of work that goes in is for us together an hour per month of paper trading. So, that means it takes 12 hours to get through a year. And fitting that into our schedules is, that's more than just 12 straight hours. That usually takes us somewhere between a week and 2 weeks. But that seems really reasonable for what's happening. And I can't believe that I, as never having even seen a chart before, would be able to have this kind of a conversation and partnering in this activity that I am. So yeah, I'm super pleased. It's become fun. And I think you probably remember back, John, to our first few sessions. I was pretty anxious, and part of that anxiety was just wanting to understand what was going on. And so until I could get over kind of the basic hump, which didn't take very long, but maybe by our fifth session, I felt like I could kind of understand the pattern that you two had going on. And once I could do that, now I could actually back test by myself, dare I say. Scott's nodding his head here. But yeah, I believe I
Grand.
could paper trade back test by myself now. I
Wonderful.
wouldn't feel confident doing the live sim yet. Yeah.
That's a huge achievement. Well done.
Yeah, thanks.
And
That does feel really
wonderful to
big.
hear. Yeah. Okay, so I guess we didn't help that anxiety phase by asking you to look at trading natural gas because it can be
Yeah.
it can be very great, and it can also bite you in the back hard. So that'll show what's happening there. So okay, just a moment. This is from Gig. Yeah, Gig's. A gig saying, watch out if you're using Ninja Trader. Your stops are stored on your computer, not on the platform. So you have to be ensure that your computer holds its connection and is running without any dramas. And that's absolutely wonderful. Now,
Thanks to Gig.
I
That's
I am hoping that we can have you folks back because everyone is so excited about hearing from you and learning getting some of these questions answered. It's something we haven't
right.
done before, and I don't think many others have either. So hopefully, Amy and Scott, hopefully we can have you back in another 2 weeks or sometime that's mutually convenient. But in the meantime, thank you so much for being with us. This is a wonderful thing that you've been prepared to do for our clients, and there's lots of cheering going on there. So I'll say bye-bye to you now, folks, as we move on with the webinar.
Okay.
Thank
Thanks
you,
for having
John.
us.
Appreciate
Yeah.
it.
Bye. Here we are. Let's see if this thing is working. Here it is. This is a slide about Mark L, who we were just been talking about. Back in 2018, I asked Mark to paper trade any market he liked for a year. So you've essentially heard this story already. He chose to paper trade natural gas for the whole of calendar. It says 2013. That's a typo, folks. It should be 2016. This is what happens when you start putting this thing together at 4 o'clock in the morning. So here's my challenge to all of you out there who are not trading Danielcode. Run through yourselves wheat, as I've shown you from Amy and Scott's spreadsheets, or run through natural gas for the whole of 2016. You're going to need to have definable rules so that other people could repeat it. But if you're not well above 800% on your margin, which was $3,200 back in the day, you need Danielcode. And Mark ran a straight trading system without allowance for slippage, commissions, etc., and just one contract, no pyramiding. Of course, once you start talking about pyramiding and increasing leverage, these numbers go through the stratosphere. And at the moment, as Amy's just kindly said, if I'd said to her at the beginning of this, before she started, that you can get these sorts of returns, she'd say, don't believe it, it's rubbish. So there's a reason that I haven't actually spoken to you before in the actual detail that we're going through today, and allowing you to speak to traders themselves or students themselves who are going to become traders, because it sounds so ridiculous. And it's amazing to me that this is out there, has been out there since late 2007. Trading time has been out there since 2016, 17 or thereabouts. Folks are still putting up with their, gee whiz, I had a good year with my fund manager. I got 8%. It's a joke. Anyway, let's move on. That's why I call it the greatest secret never told. This psychology of traders is a big issue, what you need to be and what will work. The best model, I believe, and the model that I present, is to be passive and accepting. We can't force the markets to do anything. This idea that we've got to jump into this market, that market, just calm it all down. Folks who are really aggressive and always searching for a trade, I found that they don't ever make the jump to be a hugely successful trader. And some of those folks are quite frankly addicted to trading. They just go on and on and on and on. So remember, Danielcode's a series of rules based around some time and price ratios. And what we get initially, or what I found initially when I was searching for the Danielcode, is we got some time cycles. And we use those time cycles not only as themselves, that is time cycles, but we simply put them on the chart as price targets. Time cycles, if you visualize them on a chart, they're vertical, and we simply take exactly those same ratios and put them on our members' charts as horizontal. And those are the price targets that you're looking for with target recognition, which is what drives the Danielcode price trading program. Another question here that I didn't get to ask Scott: how long will it take you once you're serious about starting to trade? It will take you less than 20 minutes a day to place your orders. Once you've done that, you can go away, play golf. That's what Gig does, or anything else at all. Let's move on. I guarantee, it's a big expression, that, isn't it? And I'm an attorney, so I understand what it means. You will get very similar results to Scott and Amy. If you paper trade the same markets using the same rules, by definition, you'll get very similar results. Now, there is some scope to personalize the program, but very little. I am aware that Scott and Amy have personalized one of the techniques, I should say, involved with risk management, but there's very little of that. And everything to do with trading Danielcode time signals is a light switch solution. You either have a trade signal or you don't. There's no guessing and no pondering about it. You either have the signal, you put it on. The market either decides it agrees with our analysis and will elect the trade. By saying elect, I mean it will go to the number that we specify in all of our trading programs. We specify the number which has to be reached for you to enter, where to put your stop loss, and any other detail that you need to be aware of. So that is the only limit I'd put on that guarantee. So this, of course, folks, should all lead you to the Danielcode tutorial. The Danielcode trading tutorial will make you a super trader. This is the link to see the curriculum. And if you're interested in doing a tutorial, ask me for the link to see how our video tutorials work. Below here, we've got some comments that we've had been posted for a while. And these are from Greg Palladini in California. And Greg is a master trader, a wealth fund manager. He's done 2 full Danielcode tutorials. Go to the forum page on our website and click on look for the link, Danielcode Trade Tutorial or the Danielcode Training, something like that. And what it is Greg very kindly agreed and offered that he would post all of his comments for all of our clients to see as he was going through his second tutorial, which was about trading time. And he's done that, and it's been just a wonderful thing for so many of our clients to be able to see that experience that Greg's had and to give them a feeling of what they can expect going forward. So Greg's with us today, and Greg, thank you very much. I certainly appreciate that. And here's the post from Greg, short NASDAQ. And he says the stop wasn't touched if you had it in the right place. It just drifted down with the trade, and it's at plus $11,800 that trade so far right now. Wonderful, thank you, Greg. That's absolutely fabulous. Good and well done, mate. That's good stuff. Okay, folks, to try to wrap this up for you, I know we're a little bit over time. I suggest that sometime you go to the chart archives at the website www.thedanielcode.com and go through that. Glance at least at that link, which is called Chart Archives, and you will see in there over 40,000 charts that I've prepared for members since the Danielcode went public in late 2007. Over 40,000 of them, all prepared manually, of course, and you will be hard-pressed to find a market that has ever turned without first having had Danielcode target recognition, which is the trigger for our price trading. Anyway, thanks for being with us today, folks. I'll be back with you in 2 weeks. In the meantime, if you're anything you're particularly interested in, please send me an email. I'll try and get something ready for you. I'm actually hoping that we can encourage Scott and Amy to come back in 2 weeks and tell us of the progress they've made. In the meantime, if you haven't already had a free trial of the Danielcode, you're very welcome. Go to www.thedanielcode.com to start your free trial. Just hit the register button. Any issues you might have, contact Terry, please, at support@thedanielcode.com. Support@thedanielcode.com. Finally, I like to show you this disclaimer, and also as a warning. It is very, very easy to lose your money trading if you don't know what you're doing. So I do suggest earnestly that you make sure you understand what you're doing before you risk any real money. The industry assesses that 90% of traders, new traders in futures, will lose their bank in the first 30 days. I think that's a pretty conservative estimate, but the good news is that while it's really easy to lose your money if you don't know what you're doing, it's equally easy to make a whole lot of money if you do know what you're doing. And the best way to know what you're doing, send me an email, jneedham@thedanielcode.com, and I will be happy to teach you everything worth knowing about the trading business. So that's it for now, folks. Excuse me. Enjoy your weekend. You still got another day of trading to go. For me, it's midday Friday here, and I put my orders on, so that's me finished for the week. I'll look forward to talking to you soon. Bye bye for now.